Harris, the Chief Executive of Port Shelter Investment Management, now joining us. Hi, Richard. So after yesterday's announcement of the U.S. walking the talk, deciding to walk out of the Iran deal, what are you factoring in as far as crude prices go? Could the current rise be short-term in nature, or would you say that, yes, $75, $80 is the new normal, especially with what's happening in the currency market?
Well, over the last year, oil has risen pretty well 50%, for around the $50 level, which is a pretty extraordinary move all in all. Now, that's not necessarily going to be all geopolitics. So, there's obviously quite a lot of demand underpinning there. Of course, when oil prices reach these sort of levels, we are talking about a lot more supply, and there is a lot of supply around. So you sort of think that there must be a cap on the oil price. But I think for now, the market has got the momentum under its belt. Yesterday, for example, the price fell nearly 5% before rebounding and ending up a couple of percent. So it's obviously a commodity the price doesn't want to go down. We don't quite know what the impact is going to be with Iran or with the exports. But my guess is we're going to see prices at these levels, certainly through the summer.
Richard, what do you think is happening with the overall commodity space? So, of course, one is that crude is going, the way it is. But do you think the overall commodity space is seeing a decent volatile move?
Well, I think the thing about the commodities space is that we're in a period where commodities should be quite expansive, prices should be quite firm, where that's a stage of a cycle. Most economies around the world looks like they're doing okay. Yes, we've got a couple of...
I think we seem to have snapped that line. Richard, can you hear me? Okay.
Hello?
Yes, yeah. Richard, we can hear you loud and clear. My colleague was asking you about... Yeah, go ahead with your response. Go ahead.
No, I was just saying that in the commodities market, we are at the stage of the cycle where things are likely to continue to be quite strong. I don't think we're in a super cycle, but certainly we're at a stage where there's demand for commodities.
What do you think the other big risk to crude oil price could potentially be? Could it be, the Trump's attack on OPEC for output cuts as well?
Well, I think one of the reasons why oil is going up is because there's always a little thought in the back of one's mind that, if we do have sanctions, then maybe that would lead to more conflict, perhaps in the Middle East. It may lead to an even more aggressive Iran in terms of what's happening in Yemen and Syria. And don't forget that Saudi Arabia has also said that if Iran make further moves towards nuclearizing their defense system, then so will Saudi Arabia. So we could actually see a whole pipe of intention that could affect oil prices. But I think at the end of the day, there is plenty of supply out there at a certain price. And if you're looking sort of in the 80 to 100 level, you're probably likely to generate more supply in the long term.
Richard, what's also happening is, and Pankaj is also alluding to this, and we've discussed it, that how commodity prices are going up. It's not just crude, it's base metals, gold is seeming like, again, the safe haven. So until we have clarity on how this is going to progress with Iran, the kind of sanctions that we're talking about, when it's going to come into effect, do you expect a lot of money to maybe flow out of the equity markets into the commodity markets?
Not really. I don't think they're a natural switch. You may get some money moving into commodity stocks, and of course, they're the geared play anyway if commodities are going up. So I think that might happen, but I don't see a lot of money flowing out. Don't forget that the U.S. plans are actually quite advanced. It's really hinged around the 12th of May. There's supposed to be a renewal of the waiver of sanctions. Trump has merely just said there'll be no waiver. Then the various elements of sanctions have 90 days or 120 days to come into force. So it's all fairly well worked out and fairly logical. The big question is going to be whether the other partners in the joint agreement will play ball, because, after Macron's been to France, why should he be too careful about not allowing people to sanction bust? on French territory. The Chinese will continue to demand oil because their argument will be to say, well, Iran hasn't done anything. It's really the U.S. pulling out.
Okay, Richard, always a pleasure chatting with you. Thank you so much for joining us here on ET Now with your